we've actually answered all of these questions right now. We've done benefits and risks, what's the key differences, are structured warrants suitable for you, ingredients of a warrant, I showed you that little flower looking thing, how do issuers price a warrant, Black-Scholes-Merton option pricing formula, size and duration of a new issuance, 6 months to 5 years, but usually issuers issue between 6 months to 1 year. Can you teach me a formula to price a warrant yourself? Yes, you can, but you don't know the key things of vols, you don't know interest rate, you don't know dividend. And next.
Hey, issuer, I have a question for you. How come on your term sheet you write the warrant is 15 cents? Why? And then on day one of the trading, it is 49 cents. Does that mean it's trading at a premium? And then if it's below 15 cents, discount?
So when are warrant prices not following the underlying share? I would say there's 2 possible reasons, and these cover most of the time. Whenever you're not sure, just grab a screenshot of what you don't understand, send it to us on our Telegram, and we would love to help you troubleshoot and figure out what's going on. So this is the first reason, and this is the second reason of why your unstructured warrants may not be moving in the same way as the underlying share. First reason is a low inventory. So low inventory alerts, we put it on our website at www.nagawarrants.com. See, I told you this website is important. And it's also available on Telegram. We post it every Friday. And it shows you that these warrants are actually low in inventory. That means they are highlighted red on the traffic lights. But this is just an easy way to see it. So these are already red. That means do not enter, do not enter. You can always exit, but it is very hard to enter at a fair price, so just do not enter. So when you see a low inventory alert, it means red. So sometimes, say you got your bid and ask price. Just now I did a 2-hand thing, right? Mirror image, this is the bid, this is the ask. From green, it becomes red. Issuers already increased the ask. What happens? Some traders, they can actually queue in between the issuer's price. So this is 10 cents and this is 15 cents. Okay, this is your bid and this is your ask. Okay, your left hand and your right hand. What happens is somebody else can be queuing at 10.5 cents, 11 cents, 12 cents, 13 cents, or sorry, somebody else can be queuing at 10.5 cents, 11, 11.5, 12, 12.5, all the way to 15. And so on the market, you'll see that the spread is very tight when you look at your trading platform. And that's when sometimes, say, if on the market you see it quoting at 14, 14.5, underlying is going up, but people are taking profit, they can sell it down to the retailers because the market maker is queuing at 10 cents and 15. Bid is 10, ask is 15. So when that happens, it is possible that the warrant will move down when the underlying goes up. That is one scenario when there's a low inventory. The second scenario of a warrant not moving in tandem with the underlying share is on the day of listing. So a lot of individuals, they notice that on the listing requirements, minimum issue size for a structured warrant must be 15 cents. But we've mentioned this a few times, that price fixing is at a minimum of 15 cents. That's a regulatory requirement, right? However, on the first day of trading, for example, the Supermax HC, it will show you that the 15 cents is totally insignificant and that nobody can even buy or sell at 15 cents on day one. So this is the Bloomberg screenshot that we've taken from our Bloomberg machine. And on the first day, the second that it was quoted, the second it was listed on the 24th of July 2020, first bid and ask was already 49, 49.5. I don't see any 15 cents. So immediately the price it's quoting on the live matrix, it will correspond. That is the fair price. End of story. Issuers, we look at, why do we choose to issue warrants? Issuers, we look at the market demand and whether also it fits with Bursa's listing requirements. So we look at these two things. If we have many traders that come up to me, say somebody wants to buy 20 million warrants right now and they ask for a specific one, no problem. We'll say, yes, there is a market demand. And then we will issue it and make sure that it corresponds with, we stick within the guidelines of Bursa's listing requirements. When it matches, then we're happy to issue warrants on the underlying stock. For example, if you look right now, there are tons of rubber glove stocks, rubber glove warrants right now because there is a market demand. You can have maybe 50 structured warrants on rubber glove stock on a Harta Lega, for example. But on something that is not so popular, I won't mention which companies, but something that's not so popular, it can maybe have only 5. Mainly due to market demand. Issuers will listen to market demand and issue accordingly.